Because he's close to them.
Okay. But you said January 28th?
We have time. We have a time, I'm like,
Oh, we have some.
good, yeah.
Pretty sure.
Dave wasn't sure if he could make it,
Yeah.
he's in Green Bay, he might, tune in.
These be special.
Well, that's
And Jacob said,
special word.
hello.
That was always.
Jacob said a party,
At a party.
holiday work things. You talking?
I am.
Hi, Deb Playfeld.
Hi, Deb. It's nice to put a name and face.
Yeah.
Good to see you. You doing?
Too bad, not too
Good to
bad.
see you.
Yeah.
Is the car still flooded?
As a matter of fact, that car, a couple of months ago, was over by the quick trip on 16 and got in an accident. No one is hurt, but the car got totaled. So.
Ken
Yeah.
said he'd be here, so
Yeah. So we did get a decent insurance outfit, so we got.
we're all here early, so.
Yeah, I figured I'd give it a little
How-
extra time for some,
How was the drive?
I was coming from Milwaukee, so
Okay.
it wasn't, once you
Yeah.
get through that nonsense.
I'll have to take you around the city and some people.
And I was thinking, I drove around, got here actually probably about 40 minutes early, so I did a little driving around, being dark out, sort of.
Yeah,
Interesting to see the river in the summertime.
yeah.
Yeah,
Did you see the little town square area?
Mhm.
Like,
Yep. yeah, it's very festive around here. I
Yeah.
like it. I like it a lot.
Some pop up online.
So the next time he's gonna see
This
this,
is,
he's gonna give him good,
Right?
Reminder.
right, the fridge, the freezers, be great. Bill, gotta know how to come home from college, like you put those cans in the laundry. Yes, yes.
There's no prayer.
That way it's kind of. Actually, bring the TV trays from, welcome Becca's office. Like, do they know that you took them? No.
So should we do an icebreaker or something? We're waiting. Because everyone loves those.
How's your Jimmy John's? It was
Fast, super fast.
Freaky fast.
Yeah.
Freaky fast.
You get the family discount?
both in delivery and in eating. No,
You didn't ask for the
I
family?
did not. He wasn't there.
You can still say it.
Thanks for telling me no.
You didn't ask.
I love the dynamic between.
Yeah, I do.
We are early.
We are. What do we do?
Did you hear from Ken?
Yeah, Ken said he'd be here.
Should we all pretend we're talking about him before we walk?
Right, like, it's not-
Inflatables looks nice. I was just saying, I haven't had a chance to decorate my house yet. Thanks. Yeah, we used to have the Santa Squadron where we had all the aviation themed Santa blow ups. And then they've just started failing over the years. And for some reason, we wound up with like Santa Dragons now. I don't know how that happened, but I guess we have a theme.
You decided to join?
Fantasy theme, some sort.
Yeah, but they're fun. For a while I had them on the cycle where they were on and off. And then I just got depressed where I'd come home and I would just see them deflated on the front lawn. Just leave them inflated, see what happens.
Do you have friendly competition in your neighborhood for Christmas lights
I
and?
would say friendly.
Definitely not friendly.
You have those people that down the way that splurge and got those permanent LEDs and they just flip color switches and now it's Fourth of July and now it's Christmas.
You got people that pay companies to come do it.
Yeah,
That's absurd.
yeah.
My friend's neighbor is the company owner.
Oh,
And so like his house lights up the entire street.
Sure.
Like, I don't have to do anything. He's got it covered.
It's got the Clark Griswold thing going.
Yeah.
Yeah.
what's that?
Said bah humbug,
Your house all decked out?
no,
Not yet?
no.
Just blame it on the Grinch. It was gorgeous, and then the Grinch came.
I think my wife is up to 20 of those Santas that are like this,
Oh,
like 20 of them now.
Barbie's got,
We have 23 Christmas bins we bring up from downstairs.
Oh, geez.
Yeah, we call it bin day. It's a Saturday. It's the Sunday after Thanksgiving. And the girls on my basketball team come over and help bring bins up.
oh my lord.
Didn't they?
We call it bin
I
day.
was saying, in English, bins are the trash. so-
Suggestion.
For Barbie, it's the Christmas. So she's got every time I turn around, she's adding more Christmas.
None of it goes in the paper.
Oh no, this is what the people want to hear.
Yeah.
Enough of this funding and stuff. They just want to know, what's the tea on Christmas decorating?
Yeah, tis the season.
It's gotten bad enough that we had to set up a separate tree downstairs with all of her Packer ornaments
Oh.
and decorated with her Christmas around the bottom.
Oh, wow.
We ran out of room elsewhere.
Serious, just imagine if you had a Packers fan and another team. Yeah, you'd have to have a whole new Christmas.
I think you're
pushing to be on the parade of homes, you see.
There are 3 teenage girls, no, you're lucky if you can make it through the front door.
Well, we did.
There's socks everywhere, and I don't mean Christmas stockings.
My girlfriend's,
Why I can't
my
say
girlfriend's
remodel
planning
project going on in
Christmas
my house.
Saturday.
So we have a reason to
Saying,
know for home.
yeah, I'm a Bears fan.
Oh,
Your house is on Bears.
I was actually like 15 years ago. Was it out?
The
Yeah.
game will be on.
Yeah.
Yeah.
I'm gonna be surrounded.
Numbered.
Oh, we can stop talking.
Yeah. Is that talking about?
Oh, that's a good idea.
There you go.
Oh, he's telling me later on what we have here, but it's very good, much flat. I will, something on the
Where? I mean.
Does anyone need an agenda?
Where the bear down.
Your house is on there. I'll take it.
I'll say it again.
Follow her household.
Our Christmas tree is a 10. I have a daughter that did a great job on that, but beyond that, yeah, the wife takes it pretty serious. I would say it's pretty nice. But the tree stands out.
I'm so impressed everyone got here early.
Is this everybody? Should we start?
It is.
Didn't Dave say he was gonna be with us?
He said he's in Green Bay and
Oh.
he's not sure if he'll be able to plug in or not, but won't physically be here.
Anybody online?
No,
Okay. Should we give it a go a little early?
Or time?
sure.
That's 6:01.
Oh, I'm sorry, I'm looking up there. Okay. Hit record.
Yeah, it's automatic,
Okay.
so it's recording.
All right, stand up for the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all.
Okay, a little roll call. Alderman Berg is here, Alderman Arnett is here. Member Human, Mr. Board. Myself are here. Members of the public and the 2 presenters are here. I don't know how you want to write those down. And then nobody online,
Nobody's online.
so Moss and Zimmerman absent as of right now.
Yes.
Great, we do have a quorum, call the meeting to order. One quick thing before we get to the approval of the minutes, we are going to swap new business and old business to get the presenters the ability to get out of here. That's
Oh, yeah.
okay with everybody. Okay, prior meeting minutes, everybody get a chance to look them over?
Yeah, I did.
Any discussion?
Move to approve.
Second.
Moved by Mr. Board, seconded by Mr. Hume. All in favor?
Aye.
Opposed? Okay. All right, opening up for public comment. Anybody, members of the public, want to say anything?
Stephanie Brewer from Main Street Program. I just wanted to say I'm excited to hear about the Riverwalk plans and the funding for that. I think that that will be a great opportunity for the downtown, specifically, but then also for Watertown as a whole.
Thank you. Anybody else? Okay, all right, on to new business. I'll let you.
All right, we're gonna start with Brian. Brian Zerwer, he is the CEO and president of Forward Community Investments, which is a community development financial institution, and has a background as an entrepreneur, investor, community leader. And he serves on a variety of boards, and I'll let you share anything else you'd like about yourself.
Sure. Ryan Zor, as Deb had said, Forward Community Investments is the organization I run. Deb and I met maybe a month or so ago, and it was really an opportunity to connect. We do this for a lot. We're talking with municipalities about what a CDFI is, what FCI's version of the CDFI is, and how we interface with municipalities and the citizens within their districts to deploy capital into those communities. So I think for the purposes of the efficiency, it sounds like you've got a packed agenda, another presenter. I figured I'd just kind of go through this presentation a little bit. It's an interactive presentation. Typically, the way I like to structure these is a little bit more of a Q&A, talk about the priorities of Watertown, sort of what its business is, what its citizens are looking to accomplish strategically, and how that makes sense to align with a CDFI in general. But a big part of this is just sort of educating people on exactly what our type of financial institution is about. So Forward Community Investments, we are based in Madison, Wisconsin. We have offices in Milwaukee, but we're a statewide organization. So our work shows up in, Green Bay, Eau Claire, the tribal lands, the north, Milwaukee, Dane County are obviously very important territories for us as population centers, but that is not the limitation to our footprint. We're a 31-year-old financial institution, 32-year-old financial institution at this juncture. And I'll talk a little bit about sort of, where we got our start. We were born out actually of the faith-based community in Madison. 30-some years ago, we were called the Dane Fund. And at that point in time, it was the sort of the faith-based community was doing a lot of work to address issues of homelessness in Madison. Natural extension of, kitchens in the basement of a church that can house people down there. But a lot of those congregational members recognized that there was a limitation to the capacity of the faith-based community to address a growing problem. This was before the municipalities kind of understood that they were going to need to step up and provide funding for it. And they had the foresight to seed a revolving loan fund to make loans to other nonprofits that were doing mission-aligned work. And that's really what we do as a CDFI today. The mission of the organization remains very much the same as it was at its origin, is to provide financial services, loans, lending capital, investment capital to nonprofits, to community facilities for place-based services. And that runs the gamut to, from a children's museum in Eau Claire, charter schools in Milwaukee, food pantries throughout municipalities, YMCA, YWCA facilities, Boys and Girls Clubs, et cetera, across the board. Just to give a level set of what a CDFI is in and of itself. So we have two primary sort of business lines that we deal with. One is a revolving loan fund, and that acts very much like a bank. So our designation as a community development financial institution comes from the CDFI fund, which is a division of the US Treasury. And essentially, the way the ecosystem of CDFIs operate is that large banks, small banks, large banks, banks of all varieties and sizes make loans to or investments in CDFIs in order for them to be able to earn what's called CRA credit or Community Reinvestment Act credit. Essentially, it's government regulation that says you can't take deposits from low to moderate income communities and then refuse to do lending in those communities. So the banks looking for an easy button basically said, is there another way we can get credit for that work without actually having to do that work? Because sometimes it's regulatorily challenging for them, sometimes it's just not in their best interest from a credit perspective or risk perspective. And that's where our ecosystem comes in. So we take these investments in from these banks, and then we deploy that capital in the form of loans or equity investments into small business lending, real estate, affordable housing investments, nonprofit community facilities is our primary niche. There are about 22 CDFIs throughout the state of Wisconsin, and they come in sort of different shapes, sizes, and varieties, if you would, with regard to the focus of how they deploy their capital. But for FCI, our programs are primarily small business, affordable housing, and community facilities. And the other part of that is a business line that is the New Market Tax Credit Program. The New Markets Tax Credit, I won't get into the details of it. It's complicated and annoying in a lot of ways. But essentially, what it allows us to do is to be awarded tax credits from the U.S. Treasury that we then deploy into other community facilities that acts as a form of subsidy. And that can either go into nonprofit community facilities. Another utilization of New Market Tax Credits is manufacturing or for-profit commercial types of endeavors that have a job creating function to them. So you'll see them a lot for rural manufacturing companies that will, or municipalities will help to encourage New Market Tax Credits being invested in some type of economic activity that they want to see taking place within their jurisdiction. And they'll work with a community development entity, which is what we act as in that type of a transaction, to put those credits in there to serve as a subsidy in the capital stack for that entity to be able to afford whatever it is that it's trying to build for the benefit of the community itself. One of the primary distinguishing factors is that as a non-regulated financial institution, we have a lot more flexibility in how we're able to make loans and make equity investments. So whereas a bank would require for an affordable housing project or any type of housing or any type of loan for that matter, anywhere between 25-30% down payment or equity contribution from that project sponsor or that investor, we've got the flexibility to be able to do that with much higher loan to values. We're able to underwrite nonprofits based upon their cash flows, the strength of their board, the strength of their governance structure, to be able to deploy capital in ways that banks would otherwise be challenged to do. So a lot of times when you're talking about making loans in low to moderate income communities, there's challenges to the valuations, right? In terms of, can you get an appraisal that makes sense for a bank to be able to do this loan? And that can sometimes be a limitation to traditional capital being able to make loans in certain communities. So that's where we're able to solve for it, because we don't have those same FDIC regulatory requirements. We can be a lot more flexible in how we arrange financing for the right types of projects.
So you're able and willing to take a little more risk than a bank.
Correct, yes. I would say we're able to look at risk differently. Historically speaking, the write-offs from the CDFI community outperform traditional banks. So it's a perception of risk that doesn't actually play out. We've turned out something in the order of $250 million in loans over the course of our 31-year history. We've written off less than 400,000. So, yes, they look riskier because we talk about higher loan to value, or we talk about debt service coverage ratios that are well below what a bank would expect. But what you'll find is that those loans don't default at any higher rate than traditional bank loans do. But yes, that is, I think, an apt way to describe it. And like I said, so where you'll see that often show up is in small businesses that are challenged to be able to access traditional bank capital, either because they're too new, typically don't like to work with startup businesses, or the individual applying or the business owner applying for that maybe doesn't have the strength of balance sheet or personal guarantee to get a bank comfortable with what their collateral position would be. That's where we're able to come in and have a lot more flexibility over how we underwrite those types of deals, and do equipment or tenant improvement financing, things along those lines. So, and then the New Market Tax Credit side of things, we're working either with municipalities or larger nonprofits that have ambitions for much bigger projects. Like I said, those typically are your $20-30 million buildings that exceed what we would be able to help with from a lending perspective because of the limitations of our loan portfolio. But it allows us to still be able to have an avenue providing subsidy into high impact types of projects along those lines. I'm going to pause for a minute because I know I'm kind of talking a lot of jargon and a lot of finance, and people's eyes tend to glaze over at this juncture in it. But I wanted to kind of get to the nexus of sort of, you know, who we are, what we do, and where we might be relevant to an entity that's looking to facilitate business activity within their community. Because that's what we're trying to facilitate, is the answer for gaps of capital where traditional banks and traditional lenders or traditional sources of capital are challenged to be able to help essentially. You know, in the limitations to how we're, not shouldn't say the limitations, but our ability to remain a CDFI and for the banks that invest in us to get that CRA credit require us to deploy capital within certain specific census tracts. And those are called investment areas or qualified census tracts. And those are determined by the CDFI fund. And there's an online map that you can use to look them up. I did do the lookup of Watertown. Watertown has, in its primary central business district, is largely qualified census tract, both for CDFI lending activity. It's also the entire footprint, which is rare, but that entire footprint is also new market tax credit qualified. So the projects I talked about that are new markets projects, they can only happen in new market tax credit qualified census tracts. So that's sort of the threshold number one of, you know, can we do some type of activity here or not? Typically tends to be that, is it qualified activity or not?
So we met this initial threshold.
In those, you look at the map, it's very prescriptive of this road, but not that side of the road, you know, down to here, but not over there. But yes, there's a big chunk of your central business district that falls within.
Does that overlap with enterprise zone type of?
Opportunity zones, so yeah, if you look at the section of the map, there's a corner in the sort of south eastern part
Yeah.
that is opportunity zones. Yes, there is typically overlap with opportunity zones.
Very good.
But not universally. That's where the maps become really relevant from the standpoint of sometimes yes, sometimes no.
Very good.
And you can have census tracts that are qualified for as an investment area for CDFI, but not be qualified for new markets. So it gets really very address specific as to kind of what types of things you could do. Now, in order to maintain that designation, we need to do 60% of our activity, both by volume and by dollar amount. But 40% we can do anywhere we want. So we do have leeway and flexibility, at least with the lending side of things. That's not the case with the new markets side of things, but in the lending area, we do have that flexibility. I can go down this path in this presentation any number of different ways. We're $35 million in our revolving loan fund, about $220 million in assets under management. The bulk of those assets under management will be over the course of the 10 years we've been competing in the new market tax credit. We've won 8 awards totaling about $220 million, about 212 of that deployed and under management. So within its 7-year compliance period. And that revolving loan fund is a $30 million revolving loan fund that supports the nonprofits, affordable housing projects, and I should qualify that by saying, you know, the term affordable housing gets used a lot. I flip it oftentimes to say housing affordability. So that looks like a lot of different ways. It's a lot of renovation, rehabilitation work in areas and geographies like Milwaukee. And in areas where there's a lot of new construction taking place in Wisconsin and so forth, or in Madison, that's going to be more, you know, light tech type projects that we might be involved in, things along those lines. But it really runs the gambit of, you know, wherever housing is probably the top priority of any municipality I'm talking to. But it's very different in Madison than it is in Green Bay, than it is in Milwaukee, insofar as the opportunities for addressing the housing issues or really the housing needs. So Madison will talk about whatever we need 40,000 units of housing. In Green Bay, they'll talk about they need more intergenerational housing, or they need more multifamily housing that's workforce level, right? So not necessarily low income, but more, you know, middle income, 80% AMI type of targeted stuff. Milwaukee.
AMI?
Area median income. So that's the threshold by which housing affordability is measured. And it's talked about in bands. So is the area median income of X, the housing needs to be affordable at the 80%. If you're earning 80% of that median income, that's where the rents need to be set for those units within it. Versus a community like Milwaukee that has something on the order of, I think, 3,000 tax foreclosed lots and homes that are all very dilapidated, very run down, that need investment in order to reactivate them, to bring them back into the housing stock.
So, Ryan.
Yeah.
Maybe you could talk to Ryan a little bit about, the Riverwalk and, you know.
Yeah, I mean, as a group, we also have a revolving loan program that we do for our downtown businesses. We also have a grant program that we hand out for revitalizing some buildings. But one of the next project on our docket is our Riverwalk. So we have paid for a plan. The one arm of that plan we don't have figured out yet is the funding part of it. Obviously, the goal would be to see what's all out there.
Sure.
Before we go, you know, we need
Ground.
money.
Yeah.
So that's one of the reasons for this meeting tonight is to, you know, have you ever done a Riverwalk before?
No. In terms of financing it, no, we've not been involved in that. You don't see them as much in infrastructure projects per se. Sometimes in the facilities that surround or activate an infrastructure project for sure. But the models themselves typically depend upon, okay, well then what becomes the revenue source for being able to pay for that, you know, tax credit over that 7-year compliance period. So nothing on the order of a Riverwalk. That being said, we've done a lot of strangely creative things. So, you know, I never say never to anything.
Sure. Well, looking forward to hearing about what you do.
Yeah. So, we talked more about the you know, the nexus of our organization. Sorry, this isn't the direction I want to go. This is a different setup than I'm used to. Tab, how do I get back to where it was? So how we work, you know, our programs and some of the areas we do, like I said, it's going to be nonprofit focused lending, real estate lending, small business, and new market tax credits themselves. One of the key variables and differentiating factors between what we do and what a traditional bank does is, whereas a traditional bank makes a loan to a small business, once that loan's closed, you know, your banker might take you out to lunch, golf, something along those lines, but you're not going to hear from them unless you don't pay the note. With a lot of the particularly in the small business or on the housing side of things, a lot of what we're doing is we're marrying that deployment of capital with what we call technical assistance. So our job is to be able to facilitate allowing small business owners or real estate investors to be able to matriculate on into traditional capital, right? We're not supposed to be a source of permanent financing. So over the period of time they're with us, be it a 3-year, 5-year loan, we're doing a lot of coaching, mentorship, guidance, helping them with the basic blocking and tackling of things they're going to need when it does come time for them to leave the nest, proverbial nest, and go access traditional capital. Because when you do that, you know, your bank's going to want to see your 3 years of financial performance. They're going to want to see your personal financial statement. They're going to see, you know, property level P&Ls if that's the niche that you're in. So we do a lot of hand holding. It's a very high touch model from the standpoint of making sure that the borrowers we're working with are long-term successful with the dollars we're investing in their project. And if we're ultimately successful with them, we've then matriculated them onto a bank who's very, you know, happy to take that on because they're a prime credit at that point. Whereas when they enter the CDFI ecosystem, they might need some work before they can get to that level. So when we talk about access to capital, we're talking not just about providing it ourselves, but ultimately creating the pathway for them to access what I kind of call capital with a big C, right? The much larger ecosystem that we're feeding into. In the sort of the genre, this is of what that work looks like. This is a project that we did that just completed in Columbus, Wisconsin. It was basically a renovation. So this is part of like a Main Street revitalization. So where you've got in some of these more rural downtown areas where the street level commercial line might be, you know, fine. There's occupancy, storefronts, and so on and so forth. But you had these second level areas that were completely vacant and had been for decades. Just nothing up there. Maybe at some point there were housing back in the 50s, 60s, but have been largely dormant. And so this was working with a developer who we've worked with a lot within our portfolio, who was able to leverage both his personal finances, Wisconsin Economic Development Commission capital grant, to be able to turn that vacant upstairs space between two buildings into 6 units of affordable housing, naturally occurring affordable housing. So really no subsidy coming into that outside of the WEDC Main Street Revitalization Grant, and our dollars coming in to help support the renovation of that to turn that into housing. Solving for an issue in Columbus, like I talked about in housing, is there's a lot of people who grew up in that community. And even if they're employed in, say, Wisconsin, they want to stay where they grew up. They still got family there, but there's no new development moving into that. There's no investment coming into that community for activation of new housing. So how do you leverage capital to be able to revitalize an opportunity to create housing where there probably was at some point, but it's long decayed? How do we start to maintain a housing stock where people who come from those communities can stay in those communities and have access to affordable, quality housing units? So that's the type of stuff where a bank is going to have a really difficult time being able to parse out between the value of the commercial real estate, this, unimproved second level. That just becomes a very hairy type of situation. We can stretch more in the underwriting of something along those lines. We can get more comfortable with things that they would perceive to be higher risk. We can work with our developer to better understand the market opportunity for, are there actually going to be tenants for these 6 units? This is a massively successful project. They were entirely leased up before the building was completed. It's now entirely completed and leased up, and they've now moved and they're now working on a second project across the street. So this is right in the main intersection of downtown Columbus. So that's how you'll see sort of the housing stuff showing up in smaller communities, and the opportunities we'd like to take advantage of there.
Deb, is our presentation tonight going to be hopefully, because I've had some complaints on people being able to hear some of these presentations in a way that they can benefit from. This is a great topic. I hope again that it has an ability for it to be heard legibly by, I mean, we're set up right for his conversation to be overheard and listened to.
Yeah, we're recording.
Yeah, so
And we have this.
You have this, yeah. So you'll have this link, and you can,
Send the link.
yeah.
right, but you can peruse this at any point in time, and Deb's got my information. I'm always happy to follow up in a
Very good.
conversation
Right.
and talk more about it. And I'm not keeping track of time, so just, play the Oscars music
Yeah,
when it's time for me to wrap it up. Another example here is, this is sort of a project we work with in collaboration with Milwaukee, who, like I said, was trying to activate these tax foreclosed homes, sort of a before and after bringing in a real estate developer who's basically renovating these homes up to the standard. This particular program was called Homes MKE. It was leveraging some ARPA subsidy that came in. All of these homes needed a level of renovation that far exceeded the ultimate market value of them. So subsidy needed to come into them. But through this whole program, we did about, I think 15 homes, or we'll complete about 15 homes. They did about 120 homes across the geography. But another example of where we're able to deploy dollars to basically revitalize a blighted neighborhood. And help to be able to provide all of these homes. The requirement of the program is that they had to be sold to first-time home buyers at an affordable rate. So that subsidy came in to buy down the renovation costs and still make it affordable relative to the values within that community itself.
Do you have any awareness of a Watertown Health Foundation in Watertown, what we do?
No, not in detail, no.
Okay, because your mission really ties into a lot of what the Watertown Health Foundation does try to accomplish. And we get the benefit of that in Watertown. Everything you're telling me is great and perfect. It just seems like there's a little bit of a similarity in your mission with what we have in Watertown through a foundation which is very unique to Watertown because of a sale that occurred to making a nonprofit into a profit-making hospital. They made this entity called the Watertown Health Foundation. They gave it several $1 million, and they gave them a mission to go out and accomplish. And they've targeted the Watertown area as their geographical area that they target, and we've had incredible benefit from them.
Yeah.
But just for your awareness.
That's good to know. And what I will say is, I'm trying to go back to talk about partnerships. One of the benefits of, I would say, the CDFI space is that a big part of what we do is collaboration, right? So we don't do anything independent. And one of the sort of similar we've talked about is we've got an initiative we've taken on with the Green Bay Community Foundation So, we work a lot with, there we go. We work a lot with, community foundations, other nonprofits. We're always partnering with other entities on projects all the time, right? Our balance sheet, we're not a bank. We're not very large. There's limitations to what we can do because of our size. And so we're always leveraging other organizations and entities with aligned missions to say, what's the priority of this particular community and its geography? We've got a mission alignment. Do participations with community banks very frequently on deals that they're looking to be able to facilitate, but they don't want to carry all the risk. They'll bring in a CDFI to partner on something along those lines. So we stretch our dollars out across the state, being as small as they are, by leveraging those types of opportunities. The Greater Green Bay Community Foundation, similar to kind of Ryan, what you were talking about, the loan fund that you have that supports the businesses in Watertown, similar to the mission focus of the Watertown Foundation you were speaking about.
Yeah.
We work with them to set up, they wanted to do a
Fantastic.
revolving loan fund. They're a granting organization. Lending is not what they do. They used us as a partner to help them deploy capital in a different way. So this is them being able to take a portion of their corpus, which would normally be invested in God knows what, a manager out of Chicago, to help take a portion of that and say, how do we do things that generate a return for the foundation? Maybe not a market rate return, but a return, financial, and then also a social, by way of being able to help facilitate. And their particular focus was, early childhood health, early childcare, education, healthcare access, workforce development, and housing.
Very so. No, I think if your involvement in Watertown, I think you'll find that they will complement what you're wanting to do
Yeah.
for it.
Right. We, on the small business side, a lot of work with chambers of commerce, and, we're not trying to replace or replicate anything that's already in place with regard to an infrastructure for capital deployment. So revolving loan funds, we're meant to complement that, right? And the idea that, more is better. Where those alignments exist and where that deployment is within the, sort of the boundaries of what we're trying to accomplish from a qualified census tract standpoint, there's no sort of, territorial conflict around it. For us, it's a matter of, if we can bring more capital into a community that needs it, if there's a need, if there's a gap, then that's what the CDFI ecosystem is designed to help solve for. So a number of different organizations we work with. Wisconsin Philanthropy Network, we've done a number of different collaborations. We spun up a loan guarantee program to facilitate small business activation within Dane County. So, that's an example of working with a consortium of foundations, both family foundations and corporate foundations within Dane County that wanted to see some more small business activation. They approached us with, how can we help? We were thinking about doing our own loan fund. The idea was, well, what we would really be able to benefit from is doing a loan guarantee fund to be able to allow us to do what would be deemed riskier loans. So the types of loans with our startup businesses, things along those lines, we can deploy that capital if we know we have the credit enhancement of a guarantee. It's better for us to be able to leverage it. That fund was grossed up to $1 million. Let us use that $1 million as guarantee, 75% guarantee. So sort of like an SBA program that we were able to leverage to do 1.5 million in deployment of new small business lending. To help activate stuff that wouldn't have otherwise been able to get off the ground because banks wouldn't.
So what is for the small business lending, like the interest rate?
They're usually benchmarked to what an SBA rate would be, so probably about 9.5%, within that band. The cost of capital that we have is always going to be more expensive than a bank's. When we get lend money from these larger banks I talked about, there's an ecosystem of dollars and there's a market rate that it's pegged to. We're solving for the access piece. We're not solving for the cost piece, all the time, at least just the limitations of the financial model. So you're going to see it be, 100 to 200 basis points more than a bank note would be. But I often encourage people to look at it like the comparable market for a lot of the lending that we're going to be doing is not a prime rate at a bank. It's credit card rates.
Sure.
It's hard money lending rates. It's far more expensive forms of capital because if you have access to bank capital, if you would get a loan from a bank, there's no but for it. We're not solving for anything there. That's not a good deal for us, right? We're working for the stuff where people have said have gone to 4 different banks. I keep getting declined. Well, that's when we become relevant in those types of situations. I'll talk about the sort of nonprofit lending a little bit here, just to talk about what that looks like. This is a strong nonprofit, a CAC. So it does a lot of service provision within communities. There's a number of these throughout the state, these community action councils. This was, the type of work we do with those types of entities. Again, a downtown Main Street facility, I forget what it was before, but it was a blighted structure on their main street. Being able to turn that into a mix of housing, being able for them to house some programs in there and their administrative headquarters. So in a deal like this, a bank would be typically very challenged to find a valuation metric that they could use to get them comfortable with. And then they go to that nonprofit and say, well, we want you to put 30% down. Well, that nonprofits' dollars are always going to be better invested in providing the services to the people they serve. We don't want to see too much of that tied up in an equity payment to be able to activate something that makes sense. So in a deal like this, we can come in and do a 95% loan to value on it because we know the strength of that organization, we know the strength of their cash flow, we know that over time they'll be able to build equity and be able to pay that down so that they own that piece of real estate free and clear over the course of, say, a 15-year repricing note, things along those lines. But those are the types of mission-related or service-oriented types of nonprofits we're working with. Less so, say, I love the performing arts, but we're looking more for the types of things that are having a community benefit with the service provision side of things. So workforce development, addressing issues of homelessness, or food insecurity, things along those lines. Childcare access. Those are the big areas that we tend to focus in on the nonprofit side of things. Deb, how am I doing on time? Do we want to, pause, ask,
I think, maybe do any of the members have questions or,
Well, I mean, did you have a timeline for it? Because we benefit from it, but I don't know, what are you looking at as far as our agenda tonight?
we're pretty light on others.
Yeah, we made it later than everything else.
Yeah, so I think
Okay.
it's whatever you just call
What
it.
the committee.
We're good. Do you have anything more to speak to the tax credits?
I can talk to the project, sure. Usually there's a flag in this, so pardon me for being so clumsy. Like I said, the New Market Tax Credit Program itself, we compete each year for an award. So the CDFI fund puts out an application. It's a very intense application. You're applying for credits, and if you are successful with credits, what you are able to do is basically sell those credits to. They're all the 5 largest banks in the country are the ones who buy these credits. And essentially, in our last award, we won $50 million in tax credits. And without getting into the legal jargon of exactly how that all comes together, essentially the way that works is in this particular case, this was a critical healthcare access facility we built on tribal lands or helped to finance on tribal lands. And in that particular instance, we allocated $12 million worth of New Market tax credits into that project. What that essentially means is that $12 million, about 25% of that dollar value becomes subsidy to that project at the end of the 7-year compliance period. So it's essentially that transaction of deploying a credit into a project, an investor coming in and buying those credits creates an equity that is capital sourced at the beginning of construction of that project. And then at the end of the 7-year period, the value of that equity falls to the project sponsor. So whoever the nonprofit is that's activating this. So we will use this a lot for, our primary areas of the New Markets program are going to be healthcare, workforce development projects, or addressing nonprofit, place-based human services. So that's where we're typically going to see them, or charter schools. So education being another part of that. We see that more in Milwaukee because of the ecosystem for charter schools there. Essentially, what it allows is for, like I said, those larger types of projects that really have a big funding gap. We're going to have a long capital campaign to be able to advance the groundbreaking on that and finance that project sooner than they would if they had to go raise all of that $20-30 million before they could get completely underway with it. So what this typically does is it involves the ability for either of us to be able to supplement the capital campaign of a nonprofit that's doing a project like this, do bridge loans for those pledged donations to it, and to be able to work with whoever their lender might be that's providing leverage debt into the deal as well. Typically the way these things work is that we have to deploy our credits when we're awarded them into a project that's shovel ready. So these, when we get an award announcement, we've got a deployment window in which we need to move those credits into a project. It's about a 3-year deployment window. So a lot of these, typically, it's either going to be a municipality or a nonprofit, a larger nonprofit within a community. We just closed a Boys and Girls Club or a YMCA in Janesville. Those typically take a longer sort of period of planning, development, things along those lines. A lot of times they're in conjunction with a larger redevelopment within the downtown, because there's a lot of consulting, project planning, bringing all of the various parties along in them. But this is the way, and this is a project, Howard Fuller Friendship Academy. So a charter school in Milwaukee that we financed. We did both their high school, which was then moving into a new facility in the Brownsville district within Milwaukee. And then also they created a new middle school. So it turned their former building, we financed the complete renovation of that old high school building into a middle school. So they had a feeder for kids who are coming into the high school program itself. Again, in this case, that $15 million, that big number you see, what it ultimately means is $3 million worth of subsidy coming into that project for Howard Fuller at the end of that 7-year compliance period, free and clear.
Would a community-based nonprofit childcare center fit in this category?
Again, there's a scale component to it. So we've got a number of different programs we run that help to target smaller projects to benefit from new markets, typically in the form of a loan that's got a sort of a forgiveness component to it.
Mm-hmm.
Because of I'll be perfectly honest, the legal and consulting bills on these projects are like eye-popping. So really the threshold of them making economic sense tends to be that 20 million and above number. But insofar as the type of activity, that's 100% aligned with it. The challenge is sometimes, so the program or the project we financed in Eau Claire, which was a children's museum, our path, which wouldn't typically be the type of program that would be well suited to new markets. The pathway to being able to activate that was that they were doing a lot of childcare. So the idea was you've got family services, you've got an entertainment center, right? A children's museum. Why don't you house family services for those families within that facility? So kids have something to do while whatever, place-based providers providing those services to the family, destigmatizing needing to go to some place for whatever that family might require. That became the pathway because they were providing, community services within the children's museum itself that allowed us to be able to do that much. And it's a gorgeous children's museum, but that's what allowed us to be able to get in, rationalize that within the community benefit side of the requirement for these types of projects. But on the whole of it, yes, early childcare education, is exactly the type of stuff we'd like to be able to find ways to activate, because that's number 2 on the list of everything we hear from communities is you need housing and we need a place for our workers to be able to have to send their kids over the course of the day. And as we all know, there were challenges to the capacity of both those areas. So absolutely.
Who makes you use this very creative way with the children's museum, who determines whether that's an appropriate use?
Usually there's a network of consultants that are always working with sponsors, nonprofits, municipalities to identify opportunities to leverage new markets. So I'd say Hope Community Capital is one we work with very frequently. Baker Tilly's got a very strong new market tax credit practice that does a lot of consulting. So they're the early conversation of, is this type of project the right fit? Ryan, they would be the ones that would have more of an eye towards, from an infrastructure finance perspective, what tools is new markets relevant? If not, what other tools might be relevant for that type of stuff? Those are typically where those start. We kind of come in as once a consultant has worked with an entity to determine whether or not a project is a good fit for new markets, then it shifts to that consultant working to lobby community development entities like us to say, hey, you've got allocation. Why don't you deploy your allocation into this project? Here are all the reasons you should do it. Here's all the reasons why it will make sense. Here's all the reasons why it will remain compliant for 7 years. So that's usually where those types of conversations start.
Is there an affordability component in your looking at projects that becomes the overriding factor in whether you take it or don't take the project? Do seems like you wanna bring in new initiative that benefit a community, but is that affordability a large component in what you look at for whether it's an appropriate project or not?
On the housing side, absolutely. Yeah, I mean, there wouldn't be really a place for us to do, somebody came in and said, I want to build, luxury condominiums in downtown Watertown, like. If that's what the community wants, great. I don't see where we're, activating anything
Very good.
or solving for any type of project. So, yeah, we typically like to see those, at the 80% of AMI and lower category with regard to being able to feel, like it's a good fit for what we're doing. There has to be a strong affordability component to it. The highest and best use of our limited capital is not financing things that are going to be market rate, that should otherwise be able to justify traditional bank financing. So, what you'll see is in, any type of cost as much to build, affordable housing as it typically does to build anything else, with the, delta basically being the quality of the finishes and so on and so forth. But the core structure itself is built the same exact way. So what you're really looking at is, okay, in order to hit that affordability threshold, what forms of subsidy or what forms of advantageous financing need to come in place to get it to the level where it's actually ultimately affordable to the community itself. So
Very good.
that 80%, up to 120% of AMI from a workforce housing perspective, depending upon sort of the ecosystem of where are the gaps and types of housing stock required or needed in that community. We do a lot of work with Habitat affiliates throughout the state. We do a lot of work with land trusts who are trying to do sort of maybe single family affordable housing, but keeping it permanently affordable. And using models like that to ensure that, okay, we can take a section of undeveloped land, turn it into, single family affordable housing with using a land trust structure to help maintain that over the duration of however many years the municipality wants to see it.
And your affordability component doesn't necessarily involve a government entity like federal money. It just has that component of making the end product that is more otherwise affordable.
Yeah, ideally, we're seeing what we kind of call organically affordable housing. So, in that Columbus project, that wasn't done with, there was a WEDC grant in there, but that was a very small portion of the capital stack. That was very much a developer who had a community-oriented development mentality that said, I see an opportunity here. I think I can make a decent return while still generating a product that is affordable to the community without needing to take subsidy in the form of light tech or something along those lines. So, ideally, we're identifying stuff that we can make work without needing to be dependent upon some type of subsidy. That said, anytime we can find and source subsidy, that's one of the things we do a lot, is to work with there's however many different WEDA programs or WEDC programs. If there's ever free money on the table, we're not going to say no to bring it into a community when we can leverage it and it's not too restrictive to what we're trying to accomplish. But ideally, we find ways to do it affordably and outside of the light tech ecosystem.
And I think when we talked to you I don't know if it's the new market tax, because there's a goal of 20% rural or something.
Yeah, so in new markets, some of the typically, so when we are given a reward, there's very prescriptive directions on how those need to be deployed. And we always have a rural deployment requirements. Basically, of that allocation, 20% of it needs to be deployed into rural geographies that are new market tax credit qualified. So that, a project in Hayward, tribal lands, that's how we qualify those types of deals. We did a Marshfield Clinic facility in Ladysmith. So we're always looking for rural opportunities. They're more challenging to find. There just aren't a lot of them, particularly in the community facility side of things. I think the rural side tends to be a lot more manufacturing driven and for-profit sort of subsidy, which isn't really an area in which we do a lot of work. Those, in our view, tend not to be the highest and best benefit to the community, because oftentimes, they're valuable to that entity for the period of the 7 years because they got the free money. And then after that, there's no guarantee those jobs stay there. There's no guarantee that plant stays there. That economic activity that was facilitated with that tax credit investment typically remains there as long as the benefit does. And then when it doesn't, there's not as much of a commitment to it, versus the community facilities, they stay. That, a healthcare facility is going to be there for the long run. But yes, there is a requirement that we deploy those into rural geographies, which again are very prescriptive in terms of what qualifies as a new market tax credit rural geography each year. So,
did you say that you looked at our town? I'm sorry.
I'm just curious on the Columbus project, do you work alongside the mortgage holders that own the buildings that they have? Or do you want to take over that building completely and have the lender yourself in the whole building?
We can do it either way. So great question, to the point I talked about flexible financing, whereas a bank would never really want to take a project like that in a second mortgage position, we'll look at it. On that particular project, we were the first mortgage holder on it, so we helped facilitate the purchase of the building and the renovations itself. And that one underwrote differently because it had commercial level tenants. But we do have the flexibility to look at taking a second mortgage position. We do that quite often. A lot of times we'll work with a community bank that's already doing that project, but they'll say, hey, we don't want to hold the whole risk of it. Would you be willing to participate in our note? And so we'll do that structure as well. That makes sense. Does that answer your question?
It does.
Okay.
Do you partner with a historical tax credit program at all?
We do some work on historical tax credit. That project did not have historical tax credits in it, but a number of the projects we work on do have that in the capital stack there.
Thank you.
So,
Did you say that Watertown, when you looked at it as a community, that there was either the demographics or the per capita type of criteria you looked at? Did Watertown look like the type of a community that would benefit from your involvement?
yeah, I mean, we go strictly off of the CDFI fund map. And like I said, we can do stuff outside of that map. We just tend to be a lot more prescriptive in like, what is the community benefit and impact? So if there's a super high impact project that doesn't fall within a qualified census tract, we don't say no on that basis at all. But to your question, a substantial portion of your central business district is qualified. So that makes us feel better because it says, okay, we get credit for that deployment activity from the CDFI fund versus the other 40% where we have the jurisdiction to do whatever we want. We don't get brownie points, if you will, for that. And we want to always kind of make sure our qualified deployment is something in the order of like 95%. So we're pretty adamant about making sure that we stay within that, well within that 60% threshold. Because of not most of it has to do with the fact that that's just where those projects happen to be where we want to do them. But to your specific question of what are the opportunities within Watertown, there's a substantial portion of that overlay, and I'll email you the maps.
Would
so you
it
can
be
see.
putting you on the spot too much to pull that up?
Yeah, if I can, let me see.
Get the
This
internet on
goes-
there.
yeah, it's on here. Let me see. So here it is. So this map has got a couple different layers on it. This is just the CDFI qualified map itself. So this is everything. Yeah, this is this whole area here. These are the individual census tracts. It looks like they've got 3 that are designated as qualified for CDFI deployment. I go to this other one here. This will show you the new markets is essentially the same exact map, which, like I said, you don't see that very often. Usually there's carve outs. But because those census tracts are larger, so this is and then this was the opportunity zone piece of it as well. So this is your new markets tax credit qualified, and then with an additional overlay of this census tract qualifying as opportunity zone itself. So anything within this territory qualifies for that type of deployment. But you can see how the lines they'll probably mean more to you than they would to me with regard to like I just across the river there. But that's because of how they divide those.
Outlined up there.
What's that?
Why is that?
Oh, I just said that is the actual census tract. Yeah, so that's what these are. This is the actual census tract itself that they're indicating being the area that is qualified.
Mhm.
So, my read on it is it's your primary central business district
Yeah.
that falls within that map.
It's the oldest portions of the city.
Yeah,
Yeah.
it's,
Yeah.
Which have the smallest houses,
which,
which have the smallest houses in general.
right.
Yeah.
So that gives you a good framework for understanding, when you're working with a CDFI, to the extent that there's relevant deployment opportunities, one of the first checks is gonna be, well, how much of that can take place within a qualified tract? In this case, quite a bit of it, at least in that central area. That might not necessarily map with where development itself is happening within the municipality. But oftentimes that maps with where maybe the dollars aren't flowing into those central business district areas as much as they are in the outlying areas, depending upon how development's taking place within that area.
Well, Deb, how again did this presentation is great, but how did we even get this person and this idea on our agenda? Did you reach out to them, or how did this become a reality?
I reached out to Ford Community Investments. They worked in the Black Business Hub in where Withick is, and so I was familiar with Ford Community Investments, and so we just met for coffee because I thought let's see what you might be able
A
to
couple
do here.
meetings ago, we had talked about Deb trying to reach out to people in the investment world to bring in so that we can learn how to create opportunity.
We definitely need it.
Any other questions I can answer while I'm here? No, it's a lot.
Yeah.
Thank you very much.
Yeah.
Yeah, I think next steps to, kind of brainstorm a little bit what we might be able to use this.
I'm sure there'll be a lot of follow-up.
Yeah, so.
As we internalize all this.
Yeah, I mean, a key part of what we do is we talk about we're an investor and we're a connector, right? So there's a number of things we do where we don't deploy a dollar, where we don't make a buck, right? Where it's just sort of a matter of, we've identified a need, not something we do or is relevant to the work we do, but we have a number of different partners in our network that we collaborate with where it might be relevant. So, to the point of, infrastructure finance and so forth, like, certainly a lot of people in our network that do that type of work, even though it's not ours, that we are always happy to make connections and keep conversations going, because that's the difference between us and the bank, is we're motivated by what is the impact on the community, what is the development and net benefit to the community over the long run. And even if it's not something we can do directly, let's look at our ecosystem of partners to be able to figure out how we can facilitate that outcome.
I mean, do you have your ability to help other communities? We could use you, I can see, but don't you have other demands in other places where you could be also providing?
100% water.
I know it.
No, I mean, this is a big part of my job is, planting the seed in the minds of those who are looking at trying to facilitate certain types of activities within their communities to help them understand this ecosystem, because a lot of people don't know what a CDFI is or how we work or what we do.
Yeah.
So a lot of that's just the education of, this is a tool that should certainly be on people's radar screen to the extent it's relevant in whatever that activity is that they're trying to activate. It's just one of those things where, for me, it's the benefit of being able to come into community and say, hey, you should know about this. Because at some point it might be relevant, and when it might be, you'll know where to at least start the conversation.
We're gonna use you, I can tell that.
Great, I'm here and happy to answer questions.
I'm curious as to your client mix, how much of it's like for-profit entities versus not-for-profit?
So you're gonna, in that portfolio, the community facility nonprofit part of it is about 60% of our revolving loan fund. It's 100% of the new market tax credit deployment, right? So that's all strictly nonprofit. The other 40% that is for profit, I'd say about 30% of that's going to be housing related. So working with for-profit, usually emerging developers who are doing, and by developer, I mean we call the people doing single family home renovations in Milwaukee developers. And then the last 10% of that's going to be more of the small business owners. So we're doing working capital, equipment financing, tenant improvement, financing, that type of stuff. That's roughly the mix.
Thank you very much.
Yeah,
Like I said, I'm
thank you.
sure there'll be follow-up.
Absolutely.
So-
Happy to be a resource.
Nice job.
Relevant. Thank you.
A lot of good information.
And
Don't worry about that.
Oh, okay. All right.
Feel free, you don't have to stay for the rest of.
Okay, no, I will get home to my family. That's
Yeah.
fine. Thank you for your time today.
Merry Christmas.
Thank you.
Likewise.
Thank you.
Tony, it's great
Thank you
seeing
so
you.
much.
Cheers.
We'll be in touch. I appreciate it.
Sounds good, Doug.
Thank you.
Packet.
Yeah, I didn't do the PowerPoint, so you're getting the packet.
That's okay.
I'm a former printer, so I like to.
There you go. Thank you.
Sure. Sure.
Jeff, did you want to introduce yourself? You might know these folks, some of these folks already.
Oh, yeah, so first off, I'm Jeff Stone. I'm Vice President of Kapoor and Associates Consulting Engineers. We were involved as part of the team that did the Rock River Corridor studies. And we worked with Renka Architects out of Milwaukee on that. I'm not an engineer. I really have much more of a government background. So my background is more, I've been an alderman in the city of Greenfield for a number of years, served in the state legislature for 15 years. Did a lot of work on different areas, programs. I was on the state finance committee of the assembly or the legislature for a number of years, 6 years there. Also was involved in the creation of WADC and served on their board for a while. So I've been around a lot of development and community at the state level, a lot of these programs. I won't tell you that that I'm an expert in every program that is out there as far as finding money, but what I wanted to accomplish tonight, and what I think is important, is that the city invested in the study of the Rock River Corridor, and with to create a vision. And I think, you know, part of what we've seen tonight is the idea that there's the goal of redevelopment, new development in the community, particularly in that corridor. And I think it was helpful to have the maps up there that were just showing that those are areas that have some incentives associated with them. I was really happy that he highlighted the opportunity zone area on the east side of the river, because I think that that's one that I'm going to come back to a little bit in this presentation, because there's some other advantages from a grant standpoint to that particular area of the study. The very last sheet, which maybe a few of you are looking at, I just wanted to show you a number of folks went on the tour of West Bend that we did of the river corridor. And this was kind of a high level breakdown of the funding sources and costs to the Riverwalk that they did in West Bend. And so you can see, and it was done in a number of phases over a period of probably most of a decade. And so it should be the last sheet. It's a large oversized sheet. Hopefully we got that. I kind of brought that to show, you know, there were a number of sources of funding that went into it. There were private partners from the community that participated in that. There were grant funders from the state and from other organizations. There were also city dollars that were used for that. There were TIF dollars from the development that occurred in the area. And so I just wanted to kind of paint that picture that there's not a single silver bullet that's going to finance the completion of the Riverwalk. It's going to take a number of elements probably to make that happen. And it will probably be something that occurs over a period of time. And so the other lesson I think that was key from the discussion that we had with West Bend was the idea and that you have to have your plan kind of be planning and have something in place, because oftentimes what happens in the grant opportunities is that you can get grant dollars, but it's got to be for something that you have a plan for, you have a design for, and you're ready, it's shovel ready when you put in that application. So for example, the first grant package here that I talked about is a Vibrant Spaces grant, which has been used in a lot of communities across the state, particularly a number of smaller communities. And what is one of the key elements there is that grant, you have to have a plan, a shovel-ready plan in place. So if you get that grant, which they just opened the application period for that, for the coming year. And that, you need to be shovel-ready and ready to build that this year in order to apply for that grant. So I think that's one of the things that the community and this committee in particular needs to think about is what are some items that could be planned and designed and be ready to take advantage of some of those grant opportunities when they come. The other thing, the Vibrant Spaces grant, as you go through there, I wanted you to just have, kind of the overview of the information to be able to review it and get an idea of what staff is probably going to have to do in order to prepare a grant in an application. But one of the things that you will see in this is that areas that are within an opportunity zone are eligible for a higher match. So they can do a 1-to-1 match for each dollar that's put into the project locally. The state will match that dollar for dollar. Outside of an opportunity zone, it's a 3-to-1, a $1 grant for every 3 the local government puts in. So I think that gives you a little direction as far as focusing maybe your efforts. If there's opportunities within an opportunity zone to move forward, that might be where you want to focus. The other thing I'll just mention on opportunity zones, recently I was in Chicago at the HUD office there. That's now the regional director for housing and urban development for our region is former Wisconsin State Senator Dewey Strobel. And he had asked me to go down there and attend a rollout. And there will be new opportunity zones that are going to be created. Some of those may enlarge existing opportunity zones, but that's something that map may be changing. It may be creating either new or additional opportunities to pursue. So that's something that should kind of be on our radar as we look forward to how we might
What's
come up
the
with funding.
timeline on?
I don't know the exact timeline when that will happen. The last round of opportunity zones, each state was asked to provide the opportunity zones. So it was done, I'm trying to remember how long ago it was, probably, it was during the first Trump administration. So it's been probably 6 years or so since 6 to 8 years since those rolled out.
Just looking at where you mentioned the 1-to-1 match, not only opportunity zone, would we be considered rural community for the purposes of that?
That's another element that specifically was brought up. I think they may be looking at some broadening of the definition of a rural community, and that would be probably on the RDA, Rural Development Association. So that would be something else to keep an eye on, because that's been precluding us in the past when we've looked at some opportunities.
And then the other thing I noticed is, obviously most of this would occur in the opportunity zone, but just allowing flexibility for the community. It mentions as well the Main Street community as another criteria that could be used for a 1-to-1 match instead of opportunity zone.
Yeah.
What would we need to do to qualify as that?
That I'm not as specifically, Main Street is a specific program, and I'll be honest with you, I kind of looked at this through the lens of the river corridor.
Yeah.
But I know that's something that communities can apply for, and I don't know if you have any background with that, but that's, you can apply to become a Main Street community if you aren't already.
Yeah.
Oh, yeah.
So that would right away get us, even if it was outside the opportunity zone, that would still get us to 1-to-1 match.
And one other thing to think about, and I know the community may have used some of these Vibrant Space grants, and you're only allowed to get one of these for your community, I believe every 2 years. And so you also want to think about that in coordination with others in the community. I don't know what the status of that is, but the broader picture, I think, for the community is to think about, how does the use of that grant dollar fit into this? So that's another. And on that particular grant, kind of just as a reaction to what's in the corridor plan, I think most of you have seen that or are familiar with it. The river walk along the east side of the river to the north of the Main Street Bridge. I know there's a gap there. There's an area that was highlighted as a potential kind of I'd call it like a pocket park, but an area where maybe there would be a little bit more development, something that's the kind of spot where I could see something like this being used. It would be, these are usually on the public property. Sometimes it's alleyways, but sometimes it's more of a parkway. And it would be an opportunity to create something that would kind of highlight the continuing expansion of the Riverwalk within what was put forward in the plan. So the Vibrant Spaces grant was one that I wanted to at least highlight. It's one that's relatively straightforward. You could do that in a number of areas along the Riverwalk, and it would be a way to advance the plan. And
Who would be the applicant, the municipality?
Municipality has to apply.
yeah. And then the next grant that I wanted to highlight, which I personally have found to be interesting is, and it's partly it's because of the flexibility of it, is I love the name of this. It's the non-state grant from the state. But it's one that's relatively new. It's been in the last 2 state budgets, and it's administered by the Department of Administration. And you'll see there's a number of criteria that it can be used for. You'll see it can be infrastructure projects. It can be things that are for economic development. It can be for the arts. It can be for other programming. But it's a very flexible program, and it has the ability. In the first round of funding that they did, some of the grants were well over $1 million. And so this is larger grants. They're usually going to want, I think in this one, they may have even specified that they want to see at least a dollar for dollar grant match from the local community. But that's one that you might be able, it has larger capacity and more flexibility than maybe a Vibrant Spaces grant. So that's another one that.
Do we have to have half the money in hand before we can even apply?
Yeah. So that's the other thing that I think as you look towards this plan, and kind of why I wanted to bring that list to show part of what West Bend did was they built supporters and funders, not only the community, the city, but also community supporters that from the larger community that were interested in seeing this development occur. And you can see West Bend Mutual, for example, came in with $500,000. That was part of what helped them, I think, spur that on. The other thing that we learned in that presentation was that because they were ready, when there were a large number of grant dollars that came, particularly right at about the time of COVID, and they were doing a lot of investment in outdoors public spaces and things like that, they were able to step forward and say, we've got a plan, we're ready to go, and take advantage of those opportunities. But that really is something that this group and the city is going to have to lead on in having those plans ready so that when the opportunities present themselves.
So on that topic, I don't see the design costs represented on this sheet. I just see construction costs.
There are some, I was trying to figure it, they could be built into the construction costs, but I think there were at least 100,000 in design costs that I saw.
And the reason I ask is last time I saw an estimate for the Riverwalk, the design costs associated with that were quite substantial in the millions of dollars themselves.
Yeah.
So that's what I'm looking at. How did West Bend get to that point of being ready, assuming they faced of a $6.5 million project, a similar scale of design costs?
Yeah, and
how was that funded?
That'd be a good question. I think we could follow up with Jay Shambo a little bit on that to find out if there were other costs. Sometimes they're allocated as part of the construction costs, but they would have needed to do that. They would have needed to have that design pretty much ready to go.
Yeah.
So I think it's a good question that may not be reflected here.
And then the single largest non-city item on here in terms of revenue is the neighborhood investment grant. What's the actual source of that one?
What they did was they went to the building owners along the Riverwalk or around the Riverwalk and asked, and they pooled money together for that fund. what they saw out of it was when the Riverwalk was completed, their buildings. The value of what tripled, Steve, wasn't it triple?
Yeah,
More than triple. More than
yeah,
triple,
some of those buildings.
so they got basically paid back in equity. So we would have to put together that marketing plan as well.
Right.
But yeah, West Bend it was a really cool tour. They did a fantastic job. One of the reasons that community was chosen for us to look at. Similar population, two major highways that go through it. The core aspects of West Bend are very similar to Watertown. That's why we thought their Riverwalk and our Riverwalk, basically, they're the same length too, I believe.
That was
80
one of my questions.
Yeah, Katy Street to Milwaukee Street was the same exact distance as West Bend's Riverwalk. So their project is almost right on par with ours. Obviously, construction costs have gone up,
With the
but
pedestrian bridges?
they did, yeah.
Do they have like a professional
multiple
fundraiser
bridges.
or were these just?
I think this was mostly Jay working with the business.
Jay and what's her name?
She
Came and spoke here.
Yeah.
She was
I'll
really
think of her.
good. She did amazing work. She went to Madison like once a week
Yeah.
and looked for funding opportunities and.
She wrote all the grants.
She wrote all the grant paperwork. Yeah, she was fantastic.
And,
West Bend's around 15,000 bigger than we are though.
It was,
They're over 30, they're 35,000,
Yeah.
yeah.
okay.
I guess the one, and kind of to that note, I don't know if the cost, at least the Riverwalk that you have is probably not of the same substance because they have a very wide area, you know, it's paved expansively. And I think some of the treatments that they do on the river banks is much more extensive as well. So the cost, I don't know that you can say it's dollar for dollar gonna be the same project.
Good point, Ken. I guess we didn't want to highlight Green Bay because that's
Yeah, no,
that's
No,
not,
they're a good.
that's
size.
not apples to apples.
But it's close.
And, yeah, so, and that's kind of what I was hoping for is, you know, if we just kind of a discussion, if there's, you know, points that we want to bring up, but I think the thing I wanted to bring back, and I had talked, I think with the mayor and with Deb earlier was, I don't think you want to lose, the momentum that you have on this project. I certainly don't want to see this become a plan that sits on a shelf. And I think trying to figure out what are the steps that we can take in the short term and how do we build that long-term plan so that when those other opportunities come along. And also the other thing, is the TIF dollars is another, you know, as you get development, those developments can help me.
Yeah, there was a 280 unit apartment complex built at the end of West Bend Riverwalk.
That really went up in value.
There was a brewery in the
With the old
first floor
brewery,
of it. Yeah, it was fantastic.
And so that, yeah, that TIF contributed a lot
Yep.
to the project. And so.
I think when we talked about it earlier, there was, I think our Tony and other people chimed in on wanting to sort of focus or emphasize the area from Main Street going south to Milwaukee Street and then both sides of the river and to try to complete that portion of our Riverwalk and of the overall project that they want to try to accomplish here. We want to show some example of more identified and obvious success where it's completed. And so we were sort of incremental in wanting to, you know, make progress somewhere more obvious.
Yeah, and I guess I would encourage that, particularly as you're looking, you know, you're having someone come in to talk about maybe potential developers coming in. I think if they see that the city is continuing to make progress
Yeah.
and that's a part of the neighborhood that you're creating along the river, that enhances their investment.
Yeah,
So,
West Bend did one side of the river and then did the other side of the river next. The museum was done after the one side of the river was completed. And then when they did the other side of the river, then that's when the developer came in for the development on the end. So they activated parcels as they went along, which is kind of what our plan does as well. To Ken's point, we have to accomplish it in chunks.
and I do want to point out, you know, you've got some work already going on this year. You got the river stabilization at the park. And I'm like a Fanny Lewis Park. So they've got improvements that are going to be, you're gonna be able to point to that, you know, this corridor is gonna be continued to be improved. So I think that's positive. That was something that was part of an area that was part of the plan. And I think continuing to make those steps on a regular basis will help you with that, you know, the overall attraction of the area.
I think we were trying to, or we could have developer contribute towards some of these areas of need for improvement, you know, versus but it's not easy. You know, you gotta have, first of all, a commitment on the part of a developer on that portion of land. And if we wanna have examples, I mean, the city may have to just identify strategically, you know, areas like next to our Benson Square, that parcel of land that we own. You know, that might be one example of where we have to identify dollars somewhere to put it in there and finish again a portion of Riverwalk just to show some progress. Cause we're waiting for developers, we're gonna have one with that Oxbow project. That's gonna get potentially approved, and there's some area there where it's gonna have some improvement in a small way that's gonna show again progress.
And, you know, I think you're right, those steps are there. The other thing, kind of thinking about your other report here tonight, there may be those smaller kind of, he mentioned kind of the smaller developers that are working their way up, and they may have some access to some other funding sources as opposed to traditional bank funding. He said that, you know, and I don't think they would normally loan money or finance or pay for the infrastructure for Riverwalk, but they may well work with a developer that, as part of their project, completes that Riverwalk.
I got that too.
And wraps it in. I'm
He
sorry.
kind of hinted at that.
Yeah, so.
Where he said if we can't help with the infrastructure part of the Riverwalk, we can be the facilitator. To some extent.
So that's, I thought that was a good mix here, that, you know, finding that, you know, those type of developers, and you've got a few spots that are, like you mentioned, they're kind of those smaller parcels. It's gonna be hard to get somebody to come in with a $30 or $40 million multi-family, but if you get a smaller developer and then you have the right financing and maybe even the right partner for that segment of Riverwalk, you might be able to make that work.
Perfect. Well, thank you very much.
So that's,
Sorry.
And the only other thing, you know, that when I look at it there, you know, there may be areas that you need to acquire right of way or things like that. There's other grant programs, but those I think are gonna take a little while longer to pursue. So I was trying to put some things out that maybe would give you some things to focus on in the next year to 2 years. And then with that longer term, we could also go back. There's a number of DNR programs that might be applicable. There's DOT dollars that were used in Westland. And so that's another area that could be looked at as well. But those may take a little bit longer to develop.
Is there a catalog someplace that can reference?
Well, there's a whole website of DNR grants, which you can do quite a deep rabbit hole there. DOT really has pretty limited grants right now. They have a lot of theirs are about economic development and job creation. So unless it's somebody that's going to have a lot of jobs that's created, it's harder to go after that. They do have some programs, safe routes to school, which may be able to be accessed for this. And so that's something to keep in mind as well. And I think I may dig in a little bit deeper. I've got some friends at DOT that I might talk to and see if there's some opportunities there.
So given your experience at the State House, in my prior life in Ohio. I was also on the board for the local 1,000-acre nature preserve. And we were, because it happened to border the family property of the now Governor Mike DeWine, but at that time Senator, and at that time Congressman. We were able to get a specific carve out in the state budget for a particular project.
Senator Taylor.
Have you, have you seen that kind of thing happen?
Sure. I've
For these-
I've made that kind of thing happen.
Yeah.
But,
That kind of thing happen
it's a little
again?
bit different world.
Oh, yeah.
But there, you know, you never say never, you know, there are those opportunities, to get funding. Sometimes it's very, you know, it can be. I've seen somebody get a clock for Main Street in the
Yeah.
budget, you know, it definitely happened.
Yeah.
I would say right now, the reason I brought the DOA grant program is that's the closest thing to that.
Yeah.
That we have right now. And, it gives the governor and the administration a lot more, input. You don't see quite as many of those small, set asides, I guess I'd say, or earmarks like you
Exactly.
used to.
Yeah.
But they still can happen. And, so it may be a part of the puzzle, and it might be, you know, maybe that you still have to match something like.
Oh,
that.
absolutely. Yeah, it didn't cover everything, but it was for a major land acquisition to protect essentially upstream of everything. Like what makes no difference if you have all this crap running downstream into the
Yeah.
into the preserve. So,
Yeah.
it was a big chunk of the dollars, but was
Yeah.
certainly matched. By
Yeah,
others.
so those can happen, and, I would never discourage that, but it's a thing you wanna do strategically.
Oh, yeah, it's a one-time ask.
Yeah.
Cause they have a lot of communities to serve and only using an earmark here and there.
And I know, Alderman Berg, you mentioned, the Greater Watertown Community Health
Yeah.
Foundation. You know, I think that is a neat resource that's here.
Unique.
And yeah,
Watertown.
yeah, and most communities don't have something like that, and, you know, those kind of, you know, I think that you want to try to develop partnerships with those kind of, options in the community, you know, they probably, and I know they're aware of the study, but
We have a good relationship.
Yeah.
They're really
So there's
busy right now.
that, yeah, they're kind of building some houses.
Yeah.
But I guess my point is, I think it's going to take the community to
Yeah.
come together, just like it did in West Bend, to get this all done. But I guess I would say, I think there's a lot of positives here.
Yeah, and it's nice to always have an example. You just showed us one where I think we can try to mimic that or follow it in some way and get some benefit from that example.
And,
Question, when he's done.
the only other thing I want to say is, you know, I want to continue to be a resource.
Thank you.
I was excited to, do this plan, and I want to, I'll be here as a resource, to Deb and to you all in order
Appreciate
to
that.
try to drive
I
that.
can tell you're gonna be a help to us.
Yes.
I was just gonna say, just to give full transparency to what's discussed, is that I lived in West Bend for 12 years, where they're building the Riverwalk. Comparing the two, I think, is not fair. I say that because Watertown may be close in population, but their businesses are tripled than Watertown. They have over 1,000 businesses in West Bend. We only have barely over 300. Their Riverwalk that goes through downtown, they got the funding that they did and from the buildings. Because the whole entire stretch that they went, they had over 70 buildings, property owners that touched and affected them every 50 feet along that whole Riverwalk on one side. I know because I know people that own them buildings. I know Shambo personally. So a lot of that funding came because it was directly impacting them. Now, you don't have those buildings.
Oh, you're
for
right.
Years, right? And so you're impacting property that is only gonna impact another district of your
Yeah.
downtown, a current district. So are you looking to provide the Riverwalk to then make your downtown prosper? That has not prospered in over 80 years. I don't know, but comparing the two,
Yeah, it's an indirect benefit for them versus a direct benefit.
that would be my main concern, and not like give you
Yeah.
false pretenses on that. No, your budgetary numbers might be very accurate, but the amount of money you're getting from the business and town side are not gonna work close. There is so much money and so much infrastructure that's built so much better in West Bend than there is here. That's why that works.
Yeah, and truthfully, the demographics of West Bend are dramatically different. I mean, Washington County is one of the wealthiest counties in the
Mhm.
country. So it's a different dynamic. But what I really hope to illustrate was it's going to take a lot of different elements coming together, and like I say, there may be more, might be more not-for-profits that have an interest here than the for-profit businesses that were invested in West Bend. The other thing that's kind of interesting is there is, I think, areas of opportunity for new development in this corridor that could contribute as well.
Correct.
And I think in some ways that area was kind of built out. And even though they got the apartments at the one end and that complex, there may be other opportunities for new development that could help in different ways. So,
Or redevelopment.
yeah, exactly. It's really, it's gonna be a mix. And that's kind of the point here today, I think, is there's not one element that's gonna carry it all forward. And I would agree. The other thing I think he said is really point is if this doesn't help all of the Main Street and downtown, you don't want it to detract. You want it to be in addition to, and to hopefully strengthen the rest of the community. So, it should definitely play into Main Street, as well.
Yeah, and again, it wasn't an apples to apples comparison, it was just closest Riverwalk we could find that it was similar.
Well, nice job, Joe.
Yes, thank you very
I
much.
do have a few more copies of the
Yeah.
Oh, yeah.
papers if anybody wants those. Yeah, sure.
Okay, you also don't have to stay for the rest of our meeting.
Yeah, thank you for waiting though, for your thing.
Well, yes, it's,
And any other opportunities, please just forward them to that. If they come across your desk.
I will, I'll
We're gonna need all
probably
the help.
paper her with more things.
Thanks, Jeff, I appreciate it.
All right.
No,
Thank you, see all this.
nice job.
Okay, all right, back to old business, or do you want to stay on new business and finish that up?
Sure.
Okay, we'll go to the development plans. Did you communicate with John? Well,
The tree lighting?
Yeah.
Yes, he's on.
we agreed that one, but what about the other one? That too?
He would like more, more substance and
Okay,
details, so.
Okay, so
Yeah, so-
the tree lighting, grant has been approved by the committee, It's basically the same one as last year, right, for the tree lighting at Town Square. The second one, the Beauty Beyond Labels, was application that came in. I recused myself because I actually brokered her space that she rented, so I wanted to stay away from that one. So John and Deb worked on that one separately. John has asked for, she's a new startup business. He's asked for a little bit more detail in her business model. So when we get, when she submits that, then there'll be more discussion. We'll bring that one back, but those are the two belt grants that came in lately. Next, Weedham Park.
Do we need to take any action on the
No.
tree lighting, which is reporting?
Yeah,
He takes actions.
yeah. The Weedham membership.
Yes, so that was towards the end of the materials. And so we were members, last go around first, they have a special category for small organizations. And we got prompted to re-up our membership, and I just wanted to run it by all of you if you think it's worthwhile. I mean, I don't know how much you want me to talk about WIDA, but it's kind of an education. They do conferences.
Yeah.
You can,
I know Mason benefited from it.
mhm.
I'm sure you would as well. I don't have a problem with us re-upping. our
What is
membership.
our fee?
Yeah, what is the fee? It's like
Yeah.
600 bucks.
Well, I would say anything that is important to you, Deb, we should be supportive of, because we want you to be given all the resources that help you in your job. So if you feel there's value, I'd be in favor of it. If you don't feel it has that much benefit, then we can use the money somewhere else.
So I think it's also a good connector at these conferences and,
A lot of our presentations in the past came from when Mason went to those conferences.
yeah,
He met with people and brought back cards and then called them and they came and presented, so.
yeah. So I think it's worthwhile there. You see the same folks there and you learn from other communities and
Sounds good. We don't.
Okay. Yes, that's.
Okay. That concludes new business, old business. So last meeting, we touched on this a little bit. We kind of said to go home, collect your thoughts and come back with, any opinions on this one that you might have. So, this would be the redevelopment authority transitioning back to a community development authority.
And there's no action to be taken today, but
Just
I,
discussion.
yep, and so I did print out from the statutes what the responsibilities are of an RDA and a housing authority, and a CDA merges them together, just because I know some folks talked about that, so you're aware that.
I personally don't see any value in trying to combine. I don't.
No, that's okay. Again, remember, this was brought to us by the mayor because he's having a hard time finding people to fill committee positions. And I believe there's 1 or 2 vacancies on that housing authority.
You know,
So that's why this is being brought to our table.
I mean, I think that's it's a separate issue for them to try to figure out on. But they primarily oversee our HUD developments we have, which is the family sites and the old Johnson Arms development, and they are both very successful, do well. And most of them, well, I was on there for 4 or 5 years, and all my discussion was on topics related to those examples there. And
Tony, your point was that 90% of their meetings is about Johnson Arms, if not.
Yeah, I mean, if you look at the minutes for that.
Yeah.
It is effectively a tenant board for Johnson Arms. Handling complaints and or issues for folks there.
I did see the complaint part of that.
Yeah, and I just think that purpose needs to be served. I think it would likely get lost in here.
it will. We gotta find ways of making that board appointment more meaningful, and there's things they can do. They have a director there, they can work on that, but I don't wanna get us distracted with.
I've never sat on that board. You two have, so
Yeah.
any feedback you can give would be
Yeah.
great.
It's a very important board, but it's so different that the ability to combine would just not work.
Okay. Any other discussion on that? No, Todd? You look like you're mulling over something.
Just considering just with the amount of overlap, if we're talking housing and housing development and RDA and trying to bring in businesses and help to foster development, it does seem like there'd be a lot of synergy with that.
Well, to their point, they're saying that currently that board is focusing only on tenant stuff.
Right, which means that, now I don't know what that board's charter is, but if the board's charter is a focus on tenant issues, then I don't see a
I
benefit.
can't
to
imagine
combine it.
It's not.
But if the board's charter is to say, we need to be looking at housing development, encouraging making more, bringing more housing to the community. Or, well, then there's a synergy having it here and divorcing it from a non-charter position of just being a tenant board would actually be very beneficial if that's not its charter.
Yeah, so historically. It functions as it is now. And then I would say about 15 years ago, there was interest in trying to, because it was a fully qualified at that point. Community Development Authority, actually
Right.
was essentially that way.
Yeah.
Of, okay, well, let's broaden the scope of its vision,
Right.
but retain the same structure. Can we get the same structure to look at a broader vision than just dealing with what it has been dealing with? And frankly, couldn't get the traction for the very tension that we just described.
Yeah.
There's a pool of very small scale specific. This is what's going on here right now that needs to be addressed.
Yeah.
And trying to mesh that with big picture, let's work on housing, let's work on other development aspects. And it just wasn't working, which is one of the reasons why this was spun off as a separate entity.
Right.
So in a certain sense, we're almost going for a circle back, and I feel like we didn't learn from the last time, which
Yeah.
is we tried that. And really, the overall condition hasn't changed.
I guess where I'm coming from is to say, well, if the housing authority's charter is to focus on that small aspect, then you're right, there's no reason to have them together. But if they've lost their way and they're so hyper focused on this that they've lost the sight of the bigger picture, well, then it's time that they need to kind of be brought back into the fold.
A couple
And I-
with the fact that they're having a
and-
hard time finding people to. sit
And
board
that's
with.
what I'm going with.
Yeah.
We tried that. It didn't work the last time. And their charter isn't as specific as they're operating. The charter allows for broader activity. It's just the fundamental of, there are those needs that need to be addressed for those residents.
Sure.
And it's just.
Nine things.
I'm not saying that those are not important needs,
I know.
but I'm wondering if that's gonna be the one of the most.
Well, you're right
effective
about
to do
that.
it. Yeah.
So the different approach might be. Because I think part of the dilemma is they are run by the people running Johnson Arms. So obviously that is their number one concern.
Right.
They have 9 assignments. If the sheet that Deb gave us is correct, they're doing one of the 9. And maybe perhaps the different approach would be take some of those other 8 away from them and move those over to the RDA.
Mhm.
So all of a sudden, government collaboration becomes part of the RDA, research and planning is part of the RDA.
So, and what I'm suggesting.
Those kinds of things.
That's already part of our scope.
Well, then I'm wondering why it's part of their scope. And that's part of what the mayor was saying to us,
Yeah.
right? You have an organization that's not performing the functions. Maybe this organization should. And maybe it's just the verbiage that's on what they're told to do. Maybe they just need to be told.
Yeah.
Managed housing, all this other stuff other people are doing.
But I mean, this organization of any of the subgroups of city government. This is the one organization that has paid attention to those other 8 items. And so to me, whether they remain on their charter or not, doesn't change the fact that we can continue to work and talk on them as we have in the past. And they.
And it may be a case where instead of combining the committees, then it's a case of basically redefining what the housing authority is responsible for, scaling them down to say, okay, you're primarily responsible for tenant management at Johnson Arms. The rest of your responsibilities on here will be redistributed to other committees. Then you've got a much smaller scope for them and they maybe don't need to have as many people appointed.
That's true.
Well, that gets to a point of, do you need as many people? Because the first part of your thing has already happened. That's why this group is here.
Right,
The issue is he's not able to fill the seats that he needs to fill.
So what I
for
mean
that
is to
And-
officially take those off their charter and say, you no longer are responsible for these things, therefore you don't need as many people.
Yeah.
Maybe you'll just be a community representative that will, appear at other venues to just report the community involvement.
I guess what I'm suggesting is those other responsibilities are not things that are getting in the way of them enticing other people on the board.
Right, but if we scope them down, now they have they have a much smaller area of responsibility. They maybe don't need to have that many people, and that solves the mayor's concern.
Can you talk, Steve, a little bit more about what you said about Johnson Arms and why that's their sole focus?
What do you mean?
Well,
The
you,
folks that run,
yeah,
that are literally managing Johnson Arms are the people that are on the committee.
is that a?
Explain a lot of that.
I didn't say it was a concern.
No,
I said that's what-
I'm asking.
Yeah.
It just sounds a little.
I'm just kind of a realist.
Yeah.
right?
Yeah.
You have somebody that's in the building, managing the building.
Yeah.
What are they gonna be concerned about?
Right. Okay.
But they manage the other HUD projects in town. So there's other.
Yeah, those
Johnson
things,
Arms
do-
is
those
a
things,
building.
those things do pop up on the agenda.
Yeah,
I'm
but
not
they are,
dismissing
that is a building. There are
Yeah.
other buildings that organization is responsible for, and they
They're
tend
just
to manage them. I don't know anything that would tell me otherwise.
Mhm.
I never heard any discussion in my 4 or 5 years on there that was anything other than Johnson Arms and the family units that were on West Main.
Yeah, that's what I'm saying.
It was 100% of our discussion.
I would say that I think our main feedback is what you're suggesting,
Yeah,
which is then look at reducing the size of that board. So
Yeah.
fill the soon have the seats to fill.
Agreed.
I think they might be statutorily
It might be statutory.
restrictive, yeah, about how many people have to be on there.
Well, then
Yeah.
we can
Both
make
of
it
them are.
then instead of
To this
having a
point,
committee, make it more. of a
recharter it.
subcommittee. Recharter it, and as a subcommittee, then you can have it as a smaller organization with a smaller scope of responsibility. If we're already doing most of what they are responsible for anyway.
That's a good recommendation. Deb, will you communicate that to
I will.
Mr. Stock? Thank you. Okay, good discussion. Moving on. Status reports, we have a social media.
It was in there.
I sent it out, the videos that, some of you, recorded were most viewed. So video is a great, vehicle for attracting attention. So it might be something you want to do on a regular basis. I don't know, folks that recorded. Had,
So who is our star? So we can ask them to do more.
And Ben's video is up tonight. I just saw it.
but it's a good.
Did everybody do one?
We only had a handful of folks.
Did you do one, Pauline?
I did not.
Oh, come on.
I did.
I don't think you were physically.
Oh,
here.
by the way, Todd, you need your headshot done, don't you?
Yeah, I guess
Yeah,
so.
we can just find it.
You have his profile for Todd?
Well, no, someone had mentioned you're on another board that I could steal your
Yeah,
Health board,
they
right?
haven't, yeah, the Board of Health, yeah. But,
unless you wanted to type up just something.
they haven't really, I don't know that they've done a formal.
If you would be so kind to email me just a little, I mean, if you look at the other ones on the website, people just give a little background about themselves and maybe why they're, interested in serving on the RDA.
But as far as again, that topic of social media messaging report, that's sort of a primary thing that you would, I think, be involved with, Tom, aren't you? I would think,
Well,
if we look at that site, you either update it or you contribute to it and you make that site,
I think people are driven to a site if they watch a video that they like or something. I wonder how many people go to the website first without something that,
Correct.
generates interest. Social media is the vehicle,
you know.
and.
But if
video is-
it's information oriented and if there's updates on things that the city's involving themselves with, if you provide updates on projects, new developments, whether it's Oxbow or some other one that's coming up, I would think people become aware that that's an information source they can go to. And then they would.
Well, they
get
do
what
when
you're
when we promote the grant programs and the.
Yeah.
And the
Yeah.
phone fund,
I
our website gets
I mean, I don't think everything's gotta be an entertainment video. I think.
No, it could be informational, but
That's
if
what I'm trying to
people
say.
are more likely
We just need
to
content.
receive information, if
Back
it's
to her, I think.
receive information, video is the vehicle, like.
Oh, yeah.
short- It doesn't have to be entertaining necessarily, but it could be informational,
Yeah.
but if you have the text there
Yeah,
versus a video,
Short video is the way.
yeah.
yeah.
I think-
people are-
2 minutes or less.
Yep.
Yeah, so I would go back to that. Deb is our person to help make that.
And I've been talking, we're coming up with a social media calendar. Near completion of that, but video is definitely a part of.
Good.
Yeah,
Will that be available for our next meeting?
I think so. We're pretty close to it.
Good, because we're on the future items for the next agenda. So please submit your items for next agenda to Deb. In a
We
timely
talked
manner.
about that. We've received a lot of information here
Yes,
today
yeah.
and, how board members would like to think about next steps, or what their thoughts are. and-
I was gonna say, actually, I think feedback from tonight's meeting should send that to Deb. We need to have a collection of all of our thoughts on those presentations
Yeah,
and what the next step should be for the Riverwalk. Because we do need to make the next step, in my opinion.
Yes,
Whether it's big or small as it is, we need to make the next step. So we've had a couple meetings and everything now of figuring out what the next step is. We need to take that leap, so.
yeah. And on the topic of items for next agenda, but again, I've heard comment in my own way, just like everybody else, on different things that we have involvement with, but the fact that we didn't we changed the funding source for Stephanie Jules, and it led in its own way to her opting out of her continuation in that role. And the fact that is leading to programming in its own way having to be done in a different way. Now, Park and Rec Board has, it seems like, an overall purpose there to help with coordinating that function of some of the duties that was previously under that town square board. Town square board is gone, right? And I think Park and Rec has some of the primary duties to help in its case, but I'm just saying, we have a lot of money that was put into that through the city and through RDA and through private investment, people that put money in. But my comment that I'm hearing a little bit is that they're concerned about that town square, Benson Square, going forward with in the context of not having someone there coordinating the functioning and the duties of that. One of the topics was that there's a lot of maintenance issues, and that can be the Park and Rec, hopefully, that they identify things of maintenance and they deal with that with the dollars that they have in that account, and they make that a priority. But you still have a programming and I think some other related, and we talked briefly at the last meeting, I brought it up that you have Main Street and you have Chamber of Commerce, you have Park and Rec, you have RDA, I think, and tourism board. Those entities, boards have some ability to contribute toward helping with the fact that we have to do things differently now. But there has to be some way to make this work. And I don't want the people that have invested, like, the Bensons and the Fisher and the Belses, I don't want them to feel that we've basically we've abandoned that town square as an investment or a part of our town. It's gotta be done differently. And I don't know we're in transition. So someone has to help make this move forward. And I don't know the exact recipe for making that happen, but I want that to be, I think, a topic that
That's a good point, so
that we are
I
aware
think
of.
we need to reach out to Park and Rec and ask them what their plan is.
Well, I think having, no.
I'm just saying, if you
Don't
want
look
to
at
wait, okay, well.
She has a contract in front of the mayor today that talks about Main Street providing some of the sport to some of the events. 3. And Main Street has worked with Park and Rec to define those. Christine has a complete schedule for the summer, for the entire year.
Yeah.
For the town center established. The majority of the bands have already been contracted. So it's there, and Christine has indicated today that she will be the one, Christine Materis, Park and Rec, will be the one running the program. So those are all the conversations. I'm on all 4 of those.
Yeah, I know you are.
Right, congratulations. So we've had all those conversations, and that's where it stands today. But having Christine come in and talking about it would be
That'd be fine.
great, because the maintenance issues you're talking about are voluminous. And there is a lot of work that needs to be done in the park. So part of that issue should be brought up. And if we, as the RDA, can help, that'd be great. But, the covering the trellis to protect the bands is gonna be critical. The tiles in the park are heaving. There's been issues with the fountain every year. With power outages, which creates a new panel being required to be built. Those are just 3 of the things that I can recall off the top of my head.
Yeah.
So I think having Christine come in to talk to the RDA next meeting would be outstanding.
Perfect.
I want people like Mr. Belts who contribute with grants. I want him to feel good about continuing to be supportive of that type of our grant program, but and maybe there's a different way of doing it, that there's gonna be some fundraising done to, maybe there's somebody that still has a purpose beyond this collection of people and programs that help oversee. Maybe we had a full-time, maybe we go to somebody who's in some way funded differently maybe on a more of a part-time-ish way, in a way that helps contribute toward the continuation of of this, but I don't know the answer. I want people that have already invested to feel good about the fact that we've got some way of doing it going forward. That's all.
Hopefully Christine can shed some light on that.
Yeah, I will invite her.
Did I do the open public comment?
Yes, you did.
I was blanking for a second then. Okay, all right, next meeting is January 21st. Oh, yes.
Sorry, I thought we were closing one. Am I able to say, ask something? Or you guys then? The groups?
Group okay with that?
What's that?
Okay with opening up to the public again? Go ahead.
How long do you guys sit on the board? Like what year, like a 2-year, 3-year, 1 year?
It's 3 years.
Council is 1 year. Every year we change.
What efforts have been done in the past 9 months since I brought it up to the attention of the 120,000 square feet in downtown that's non-utilized? Has the RDA done to focus on that?
We have been looking at, obviously, we're focused on our riverfront project has been our top priority. But just hear me out for a second. In doing so, funding that has also, we've been researching funding opportunities for downtowns. So this presentation tonight is a prime example how they activated a second floor. So we're trying to open up those avenues.
When was the last year you redid the downtown Main Street? When was it last ripped up?
I don't know the answer.
1967.
It's scheduled to be done in 2028.
So what is the one project that's on the books now that we can't change?
The Main Street.
So what we do to Main Street now can impact those buildings far beyond.
Yeah, so Deb has been working with, finding out the buildings and the size of the water lines that have to go into each one. So we have been looking into certain
I
things.
mentioned that to Mason back in April, that's why we're doing that now. About the water lines.
Well, we brought it up in a meeting 2 meetings ago.
I brought it up on the Main Street Task Force 2 years ago.
That's
We've been
great.
talking about.
Because that was one of the biggest things that we had there. I just would urge that in conjunction with the Riverwalk, which I'm all supportive of, it's a great entity, that we don't forget about our downtown businesses that are currently vacant and getting more vacant.
But we have a task force or a group that meets periodically on that topic. And I think Andrew Byer is a perfect person to give some of your concerns and issues with, because he comes to all those meetings and he addresses it from a city standpoint of what needs to be done on a planning basis of addressing what we need to do in preparation for that. So Andrew Byers is the perfect guy. He's our public
City engineer.
city engineer, but he's also
The public works director.
public works director. We gave him a different job beyond being an engineer. And he oversees it for that reason. I think I would connect with him where you can.
Thank you.
Okay, all right. Motion to adjourn. So moved. Seconded,
Sure.
or all in favor?
Aye.
See you next month.
You still looking for volunteers to come and work projects on the Main Street?
What do you mean?
Always. But what specifically were you?
So my daughter's in NHS, one of the things they've got